I guess given the extreme volatility that we're seeing in the markets, it really wouldn't be fair to grade the Fed's action purely on the reaction of the markets. But given how this is a public health crisis, I guess a concern here, Al, is that perhaps monetary policy alone or fiscal policy alone will not be enough.
Well, I think that's generally correct. You know, this is a pandemic. It's at bottom a public health crisis, and I think it's a huge negative shock to the economy. And I think ultimately the path of the negative effects on the economy are going to follow the path of the pandemic. So anything that can be done from any direction to bend the curve of the pandemic down will be beneficial to the economy. Let me just quickly comment on the Fed, which is where I have my background and experience. I think it's important to understand that the tools that the Fed has are not ideally suited to dealing with this, as a lot of people have said. With respect to standard monetary policy or interest rate policy, of course, the Fed has acted aggressively. As we all know, they've dropped the rate, their policy rate to zero. They have begun a new round of what we have in the past called quantitative easing, and the impact has not been very noticeable at all, and I wouldn't expect it to be. It's just not the kind of thing that's going to help in this crisis. However, the Fed has done other things, and I think those are the things that I would grade it favorably on, specifically with respect to providing liquidity. That's a central function of a central bank, and the Fed has done a number of things so far in this direction that I think have been beneficial to some extent, I guess, behind the scenes, and hopefully will be more beneficial going forward. And you know what they are. They've increased purchases of short-term Treasury bills. They've increased the size of their Treasury security repo offerings. They've reduced bank reserve requirements, encouraged banks to borrow from the Fed's discount window at a very low rate, taken some actions to increase the availability of U.S. dollars in foreign exchange markets. But I think the key point I would make is this. I think the liquidity actions could be strengthened. And I know there are a number of proposals to do this, and what I have in mind here is the Fed taking action to make it possible for the banks to provide additional liquidity not only to financial markets and financial institutions per se, but maybe through the banking system to ordinary businesses, especially small businesses, so that liquidity begins to flow through the broader economy. I think that's very much needed, and more of this, really much more of this, would be beneficial.
So is it then your point that we will need a range of other liquidity tools to be put into action, such as the ones, for example, that we have seen during the financial crisis, like a more targeted liquidity tool like the CPFF, or is it just a matter of time and waiting for these measures to work first?
Well, I think it's really both. I think we do have to give them some time to work, and some of the things that have been done will hopefully have more benefits that are visible in the not too distant future. But I think also that more is needed, significantly more. There's been a number of proposals. There's an article by former Fed Governor Kevin Warsh in the Wall Street Journal this morning, which I'm not in a position to endorse every detail of what was proposed, but I think the general direction of what he was proposing, which is providing more liquidity to ordinary businesses through the banking system, underwritten by the Fed and endorsed and supported ultimately by the Treasury and the Congress, that would be, I think, a very good step in the right direction.
There is a growing group of people saying that central banks quite clearly, coordinated action or not, extraordinary action or not, have done or are reaching to the limits of what they can do. A lot of people are saying what we need at the moment is not broad economic stimulus, but just cash for families to be able to go into lockdown, cash for casual workers to be able to quarantine themselves for 14 days without having to be worrying about paying the bills. Do you agree that that kind of model would work given these unprecedented times?
I do. I think that's something that needs to be considered. That's a very, extreme and aggressive action in normal, ordinary times. But I don't think these are ordinary times. So I think, I was talking a minute ago about providing liquidity, which would take the form of cash through the financial system, the banking system. But this would be, I think some of the proposals are for Congress to pass laws that would make cash available. Some of this could be targeted towards companies in the airline industry, for example, that are going to need cash, but also to ordinary individuals. And I think some of that ought to be considered. So all of I guess the short answer that I want to give you is yes, I think that kind of proposal needs to be considered.